Good morning and welcome to ET Now's Buy Now, Sell Now. On a fresh start to this week, Monday morning, we've had a great start to the Lal Street on the back of a very strong US handover. Well, since there was no live markets, it's not really a handover, but we're looking at the futures action. And whether you want to look at the Dow futures, the S&P futures, the NASDAQ futures, they're all up close to 1% and doing fairly well. On the back of that, we are now firmly above 11,500. We began the day with 10:1 positive breadth. We're still 3:1 positive breadth on the Nifty, which means three stocks are advancing for every one that's declining. So very firm start for our markets this morning. Now, talking about a firm start, let's look at the stocks that are leading the charge, right? So we have HCL, top gainer. Management has given out a Q2 update, which is very strong. They say that the Q2 revenue will exceed 3.5% Q-on-Q in constant currency terms. Momentum has been seen across service lines, verticals, and geographies, and the EBIT is expected between 20.5 to 21% this quarter. So that stock opened up with a gap up. It was, I think, 4% up at 9:15. It'll be interesting to see how it holds on the day in trade. Then we have some M&A action as well, again, from the IT space. The IT space really in focus. Infosys today, again, 3-4% up, nearly 1,000 rupee stock if it's not touched that as I'm talking. They plan to acquire GuideVision for up to 30 million euros. So it's a small transaction, like a very small transaction value-wise, but you have to understand what it's doing for the company, right? They're expecting to close this purchase in Q3 FY21, and it's really going to augment their cloud computing and their digital capabilities. So that's something that's got Infosys in focus. So if you add up Infosys and HCL Tech today, the IT index is gaining pretty well. Then switching gears completely to a different sphere of the market, we have AMCs in focus, and that's obviously on the back of the most recent SEBI announcement where multi-cap schemes are true to mandate, or else they have to merge with others. And experts expect positive flows into mid-cap and small-cap schemes soon. So this is, we heard about some reclassification which may be on the anvil as well, so might be early to comment, but still experts feel that small caps and mid-caps in a nutshell will benefit from the recent SEBI move. Then switching gears yet again to auto. Tata Motors in focus. In their latest call, they've said that they're going to meet their zero net debt guidance by FY24. They've cut their capex plans with an aim to turn debt-free. So that's got that counter in focus. Then we have pharma as well this morning. Quite a few headlines to cover. Bear with me. Trump has signed a new executive order to lower US drug prices. So that's going to impact some of the players here positively, some negatively. Just something to keep your eye out on. And finally, Bharti Airtel, also in focus, although the stock is sulking right now. The company is in talks with manufacturers to make a low-cost 4G handset, which will rival something that we saw with Jio was trying to introduce a couple months ago. So Airtel too getting on the low-cost handset vertical, and that's got that counter in focus. But I believe Mobina is now ready and with us, and she could probably walk us through what's happening in the markets this morning. Good morning, Mobina. Take it away.
Well, Varun was just flagging off that momentum being witnessed in the US equity markets, and no doubt back home as well, we are seeing a strong start to the day. We have the Nifty 50 that's managed to claw back above 11,500. The Sensex as well is above 39,000. And yes, all eyes are on the technology pack, all of them gaining very smartly, like Varun highlighted. HCL Tech, Infi, TCS are all among the top gainers. You have a couple of losers, BPCL, Airtel, HUL. These are among the losing side. So telecom and FMCG largely is, sort of staying away from this rally, but IT, realty, infra are all among, the top gainers. So that's, of course, about the markets. Take a look at an MCX. It's higher by 14.7%. And even some of the other mid and small cap names like a Blue Star, Sheila, Foam, Persistent Systems are all gaining in double digits, anywhere between 12 to 15%. And that's really the cynosure of all eyes, especially post that announcement from SEBI. Let's talk about the implications of that on some of these names. And just take forward the market chatter. in general with Kunal Bothra on the technicals. We have Vijay Chopra as well joining in today on the show. Morning, gentlemen. Kunal, over to you first. Your view on the overall markets, your reading of the SEBI circular. Could we be seeing this bout of buying come by, going forward in mid and small cap stocks? And if yes, which are the ones that you're identifying that could have a good, trading gaining potential, especially if if you talk about executing a trade?
Great. Good morning, Mobina. So a lot of questions, and I'll probably try and combine all of them. And I would expect that this should be a start of a new, I would say, a strong bull market for many of these individual stocks, whether it's the mid cap, the small cap names, and the ones where I think many of the fund houses were looking to buy on a stronger note. And I think now they've got I would say a good sort of a window after the regulations or the changes which were announced over the weekend. So I think individually as well, you're seeing some fervor into the mid cap space. Now, generally what happens is that the markets probably take at least a couple of days to try and adjust towards the changing norms. So maybe I would say that for the next couple of days, you might see some bit of more stock specific movement, but then eventually I think it trickle down to the indices. So when you have a scenario, for example, where you have large cap names hitting say 52-week highs or fresh highs, whether it was Reliance last week, today you have or today and yesterday and today you have the IT stocks combined which are hitting their 52-week highs, 5 years high, 10 years high in many cases, and then you also have the slew of mid cap names which are also following it up, whether it's on sort of a sudden surge in demand into these names, or whether it's the overall buying pattern which happens into these stocks overall. So I think on the back of this kind of a scenario, it then becomes very difficult for a short-term trader to expect that the markets would claw back down and come crumbling down. Of course, if things remain status quo in the global markets, that's the biggest assumption over here. So I think in this regards, the changes what you've seen on the weekend could probably result into strong buying into many individual names. Now we need to see the consistent patterns on which are the kind of stocks and themes which see some consistent buying in terms of fund houses. And I think that's where short-term traders could focus upon. So I believe in that regards, the markets would remain buoyant for the next couple of days. You might see the movement more towards the stock specific rather than index specific. Like what you're seeing today, the Nifty is opened up 75 points higher, and it's exactly at those plus or minus 10-15 points from the opening ranges. And similar is the case with Bank Nifty as well. Now, should I go ahead with my individual stocks as well?
Go ahead, Kunal. Tell us about your high risk and low risk ideas as well.
Great. So I'm focusing on two specific themes rather, Mubina. The first one is on the IT pack, and I've been very bullish on Wipro, which is one of the large cap IT names, and I probably see some consistent patterns of buying into this name as well. So last week as well, when the stock was at 274-ish, I'd recommended a buy on Wipro with a target of 300. Now the stock has achieved those 300 levels, and I believe now it opens up further legs on the upside. Now 301.6. if I'm not wrong on the spot levels, is the, I would say 2-year, 3-year high for Wipro. And it's just about on the verge of breaking that. And if the breakout happens, you're talking of almost a 2-decade high for a stock like Wipro. So this itself could probably result into some strong and consistent buying. Hence, I'm revising my targets on Wipro. Traders could look at a buy even at current levels. Short-term targets now revised to 330 and stop loss to be kept at 285. I would call this as a relatively low-risk trade. The second is from the high-risk category, and I'll recommend a buy on Ujjivan. I think at 230, 231, where the stock is currently trading. It's an attractive buy purely from a short-term basis, expecting that the last 2 days where you've seen some renewed momentum on Ujjivan, leading to some short-term uptrend on the chart. So this is purely a very short-term time frame trade, and hence a high-risk trade. Buy on Ujjivan, targets of 244 and stop loss at 225.
All right, well, there you have it. That's, of course, Kunal Bothra's view on the overall markets, his top picks as well. Wipro from the technology pack is something he's flagging off. He's watching out for a target of 330 rupees. So that's, of course, Kunal. Ujjivan as well, by the way, target of 244 rupees, pardon me. All right, well, Vijay, over to you then. Again, same question to you. I mean, do you expect now that, any which ways we had seen the broader market sort of outperform in 2020 by a small quantum? I mean, even on the mutual fund side, we were finally seeing a bout of outperformance in 2020. in the mid and the small cap funds. Do you think that this circular could give a further leg up, a boost, especially since mid and small caps have been in a period of lull for the last 2-3 years? And yes, also do share along with that your high and low risk ideas for our viewers.
Yeah, very good morning to you and to the viewers. I think that this, I would call it a goof up which happened 2 years ago in budget. And post that 2018, we saw a lot of rejig happening in the mid cap and the small cap stocks. Now, I think this is a corrective action which has happened. And I'm very happy with this SEBI ruling that, this would give a lot of fillip to the mid cap and the small cap companies. There are loads of companies which are debt free, which are doing good, but they were not finding interest with the major funds because of this the structure. So this change of structure, this 25% would definitely, blow a new life into mid cap and small cap stocks. That's number one. So that is very good for the markets. Number two, we are just having a Fed meet around the corner on Wednesday night. So I think that if somebody wants to really invest or get a fresh into the market, one should wait for 2 days and see what Federal Reserve has to say, because I think that the United States is getting into an election, and there are very few Fed meets before the election. I think this is the last one. So I would like to wait and recommend a wait for getting a fresh into the market. Coming back to the point that where are the markets headed, I suppose that probably if Nifty crosses 11,650, we might see 11,800 also coming on the markets. So fairly bullish as of now. Again, with a disclaimer that I would wait for the major decisions in the Federal meet and the direction which they speak about and the guidance they give. Apart from that, there are a few sectors I like. Metals is, my top pick. I think that stocks like Jindal Steel and Tata Steel should do well. Jindal Steel and Tata Steel are very low risk stocks as of now. Jindal Steel trading at about 209. I think that if somebody holds this stock with a longer term perspective, quite possible that it might touch 300 as well. But even in the medium term, I see 250 odd levels on Jindal Steel. The second stock is Tata Steel trading at 407. I think that a medium term investor would easily get about 475, 500 on Tata Steel. Another low risk stock I would like to recommend is Tata Chemical. The stock has very nicely consolidated around 290 odd levels today, trading at 301, almost 3% up. So I would say that chemical space is one space which is not going to go any time out of flavor from the markets, because we've seen a stupendous rise in all the chemical companies. So Tata Chemical is also one of the better names in the market and the safer names in the market. So Tata Chemical, I would recommend a low risk stock for a target of 350. Now coming to a bit of a high risk recommendation, I would say that Tata Motor DVR, which is trading at about 62 right now, looks good for about 80, 85. And we are hearing good news about Tata Motors that they are planning to get debt free, or they are looking for strategic investor, or maybe even sell off the entire JLR thing, or they are here to cut the losses which Tata Motors has been incurring. So I think that Tata Motor DVR is a very good buy, and it's a bit risky although, but I think that it is worth taking the risk. So overall, I'm fairly bullish on the markets, and I think that markets are headed higher. If at all we do not have any kind of bad news flow regarding war, or rumors of war, or any other international pressure, I think markets should head higher.
Okay, great, Vijay. Thank you so much for sharing all those insights, and of course those stocks as well. As we've been doing on BNSN every day, before we get to queries, we have a quiz for you and for all our viewers to test how well they know the markets and their respective sectors. So today's question: which of the following IT players in India listed has delivered the highest shareholder return over the last 10 years? Highest shareholder return also means highest stock price CAGR. So look at your charts and evaluate the following 4 options: TCS, Wipro, Infosys, or HCL Tech? And while it may seem that the answer is very obvious, there is something here to trip you up. So please study it carefully. I think we have over 20 or 30 people who've responded to the quiz today on Twitter, and we'll be announcing the results and the winners at 11:45. So do stay tuned for that. That's the BNSN Quiz Connect for today. Before we go to queries, we also have to go over a BNSN stock cloud as always. We have 10 stocks that we're bringing to your attention, and my producer should have that up on your screens in just a minute. But let me tell you that some of it is from banking, some of it is from tech, as you might have guessed. So beginning today, we have the stock cloud featuring SBI on the back of a Citi upgrade, cited overstated concerns and a lot of catalysts playing out for them. So SBI should be seeing a good run according to the brokerages, Citi being the latest. Reliance. Now, last week we heard Amazon looking to buy a stake. Today we're hearing Carlyle may be looking to pick up $1 billion or $2 billion stake in Reliance Retail. So that's got that counter in focus. Again, it's performing quite well today. Tata Motors, in their recent call, said that they're working aggressively towards net debt-free status and their capex plans are being curtailed. So that's why that's in there. Then we have two result candidates for you, IRCTC and BHEL, both not the best results. BHEL loss widened considerably. IRCTC, obviously, we're not taking trains much right now. So again, there the loss has also widened. So that's something to keep an eye out for. Godrej Properties and Suntec Realty, these are there for the same reasons. Ready Reckoner rates in Maharashtra have been increased by 1.75%. So that's got those two stocks in focus. Do have a look. We then have AstraZeneca from Pharma featuring in there today because trials have been allowed to resume in the UK. So while it's got no direct impact on the Indian stock, it is going to impact AstraZeneca as a group. We then have HCL Tech, which we just told you about, their mid-quarter update, very strong, not even counting the currency benefit, they're growing tremendously in Q2, quarter on quarter. And then finally, Infosys on the acquisition, €30 million of GuideVision, which should significantly enhance their cloud computing capabilities. So that was the cloud for this morning. And I think we're now going to get on with our queries. And the first one is from the line of Deepak Chaudhary. And he had written to us earlier last week, but we couldn't address his query. He bought ICICI Bank and Axis Bank in April. So I think this is when the banks were beaten down considerably. And now he would like to know if he should hold or sell, given that the climate could go anyway. So Kunal, let's pull up the charts for an ICICI Bank and an Axis Bank. Which do you prefer, if at all? And what do you think Deepak should do?
Well, I think you should continue to hold both these stocks, Axis Bank and ICICI Bank, since you've held it off for I think the good part of the last 4-5 months. I don't believe that. I think it's a good time to exit these stocks specifically, because eventually it's a it's a sector rotation move in terms of technicals, which happens into individual names, stocks, or sectors as such. And when you generally see a market which is so buoyant, what we've seen the last 4-5 months. I think it's just a matter of time that Bank Nifty would try and play a catch-up. Now, had it been that your investments would have been in some low-rung kind of names where these stocks have been an gross underperformers, not just in the last 5-6 months, but overall in the last 2-3 years, then the questions would have been completely different. Now, the fact that you have the top-tier names in the private banking space, I believe that there is a lot of comfort and cushion to you as well, both in terms of prices as well as in terms of stability of large cap names which you are holding on. So I think I would suggest that if you don't have a compulsion of selling these stocks from a short-term basis, I think give some time for the banking stocks to outperform. It may take another 3 months, 6 months. Difficult to try and give an exact timing. But whenever the underperformance get caught up into, the Bank Nifty would go through a vicious recovery and a vicious rally, and will try and play a catch-up with the overall benchmark Nifty as well. So I believe that phase would also come by. When it comes by, I think that's a difficult aspect. But then if you've bought at lower levels, I think you should hold on.
Okay, thanks for that, Kunal. That's a very interesting analysis. And fundamentally, I wonder what Vijay thinks. So what do you think about these banks that we've just mentioned?
My sense is that one should be only in the large cap names in the banks. My preference is HDFC Bank, although, but Axis and ICICI Bank are also fairly large and I think better banks amongst the list. So I would say that the worst they have the investor has already seen. So I don't think that that those levels are going to come back again, because the entire thing has been completely engulfed by the in the prices. So I would say just hold on, hang on with the investment, and I'm sure that in the coming days we are going to see higher levels on both the stocks. So recommendation is that just hold on to the position. I'm sure better prices are coming soon.
All right. Well, that's the view then on ICICI Bank as well as Axis Bank. Moving forward, we have another query from Anand Shirsa, Delhi, and his is on IT. He says he has bought 500 shares of Infosys at 967 rupees post Q1. And now he wants to know that as it fails to climb further, what should he do? Should he continue staying invested in this, or should he consider selling out, or perhaps even in fact adding on, maybe considering averaging out his price a little? He's bought it at quite a high price, but again, technology has been really one of the winners during 2020, Infi included. I mean, I remember last year it was at about 670. It's now climbed to 977 rupees. So, yeah, it had seen a lot of momentum in the first half of the year, but for the last 1-2 months, it's just been about stable at 940 to 970 odd levels. Kunal, what's your view on an Infi?
So I think you have to look at it in a time scale of the last, I think 2 years, 2.5 odd years. So over the last 10 years, of course, all of these IT stocks, majority of these IT stocks, have done phenomenally well. But then Infosys, I think in 2018 to 2020 start was somehow trading in a band. It was trading in a range where you had 600, 580, somewhere as the lower end of the range, and closer to 800, 820 is where you saw a lot of demand and a lot of supply coming back into the stock price. A lot of resistances taking at those 800, 820 range. Now, in the month of July 2020, that's 2 months back, you saw thumping performance from many of these IT stocks. Many of these IT stocks, they rallied by 20-25% odd, individually as well. And so was the case with Infosys. I think from 720, 730, the stock had rallied to almost 1,000 plus levels in the month of July itself. Now, after that, strong, rally which you've seen, it's natural that these stocks take a bit of a consolidation. Now, look at it, as I said, look at it in the matter of the last 2 years. The stock was sideways, trading in a band. All of a sudden, in the month of July 2020, you saw a very strong breakout on the names like Infosys. These are signals, these are signs that, IT stocks overall, as well as the large cap names who have broken out of their 2 years, 3 years of resistances, they are in here for starting a new up cycle or new bull cycle, which generally should last for many quarters to go by. So purely based on the price patterns, the way the breakout has happened for Infosys in the month of July, I would be of the belief that there should be a strong upside from current levels. Now, the best case when you are positioned for a stock which has just recently broken out is to try and use dips to buy. So rather than, and I think have patience. These are the only two parameters which are required, because then when you see a strong breakout, those breakouts, they tend to last for a longer duration of time. And if you can buy it at the lower end of the curve, where these stocks are off the news flow, they are not on investors' radar, where these stocks remain sideways and silent, that's a good entry point for you to look to average. So 900, 920, these are good levels where you should look to average. And if you have a longer term horizon, I think you should definitely hold.
Right. Well, there you have it. That's Kunal's view on an Infosys. And meantime, Vijay, what about you? See, he's bought it post Q1, but he's already a little impatient, about what should he do, because he's not very happy at the pace at which, Infi is moving. So what would be your recommendation, especially from a longer term perspective?
Well, I think that if you're getting into a large cap stock, so do not hush into a decision. So I would say definitely, when the markets have run up and Infosys hasn't, so one might think that, what is wrong with Infosys, but I think that there's nothing wrong. There are good stocks. We saw, Hindustan Lever consolidating for 10 years, Wipro consolidating for a long time, and suddenly we see a spike in these stocks and they just go off the roof. So I think that it's a quality stock, quality company, quality management, and I think whatever happened in Infosys during Mr. Sikka's time, and there were a lot of rumors around there was a clash in the management and boardroom politics and so on and so forth. I think that dust has settled down considerably, and there are times when good stocks go into a consolidation and suddenly we see a spike. So I would also second what my colleague says, that just hold on to the stock. If you want to add more, I think TCS is also a good option. You can be in technology stock and again a large cap. So you can buy TCS and nibble into TCS whenever there is a fall. So you can have two stocks, and you can diversify your investment as well into two companies. So I would recommend a hold on Infosys. Do not worry at all. We might see a spike after the consolidation.
Okay, great, Vijay. Thanks for that. So both are experts giving some interesting insights there as far as those are concerned. But it seems like IT is slated to do pretty well going forward. Let's move on now. The next query is about pharma, and we have Pratap Garud from Bengaluru of India writing to us. He bought 300 shares of Laurus Labs at 1162, and he bought Divis at 3,150. The quantity there is not mentioned. This was on September 2nd. So should I hold, buy more, or sell? So Kunal, separately, one by one rather, Laurus and then Divis. What's your advice to Pratap?
For Laurus Lab, your entry price is a bit on the higher side. Now, the reason why I call it as the higher side is because in the last 6 months, the stock has risen from 250 levels to 1300, 1350. Now, these are exponential returns which you see into a stock price, from the mid cap category. So a 5x kind of a 5x kind of a move in a matter of 6-7 months approximately is too steep. And then generally what happens is when you see such kind of behavior on the stock prices, they tend to go into consolidation on a prolonged basis now, and probably a chance of a correction as well. So for the last 3 months, I was just looking at the monthly charts for Laurus Labs. For the last 3 months, the stock has had a close above their Bollinger Bands, which is an indicator on the monthly charts. Now that generally acts as some overbought kind of territories or overbought kind of a zone. So 4 consecutive months of straight closing above the Bollinger Bands generally leads into overbought nature of the stock prices. So I would I would suggest that there could be a stronger possibility that the stock may go through a time-wise or a price-wise correction from here on. So I think in that regards, booking out of Laurus Labs or maybe having some sort of a trailing stop loss as per your comfort level would be advisable. For Divis Lab, the scenario is a bit different because the stock is more of a stable name. The stock, this and Dr. Reddy, both these stocks rather were one of the front runners. When the pharma rally picked up pace, and I think that's where you believe both these stocks, typically Dr. Reddy and Divis Lab, they would tend to do pretty well. So if you're holding Divis Labs, I would recommend that hold on from a longer term view and use those 5%, 7% dips from your purchase price or from the lower end as a good average point. But for Laurus Labs, I believe that because of the overbought nature, I would suggest that you should either book out profits or at least have a trailing stop loss which is above your cost prices.
Okay, great. Thanks for that, Kunal. And Vijay, what's your take? Laurus is very expensive, like Kunal just pointed out, but what numbers they're delivering? And if you annualize their Q1 performance, I think it's still not even 15 or 20 times earnings. So what's your call on a Laurus, and then obviously Divis as well?
Well, I think that the stock definitely is expensive for the size of the company and the kind of results the company has been posting. The stock has shot up quite significantly. If you're getting such a fantastic profit, I think that it should be booked. The stock has moved up phenomenally, in the last 3-4 months, and I think that it is very difficult to sustain such kind of a growth. But Divis is a larger company. The business model is quite different, and I think that they are much stabler companies. I would recommend a hold on Divis and an exit on Laurus. And if at all you want to nibble into pharma space, I think that people who want to invest into a longer term perspective, I find Lupin, Glenmark, Cipla, and Sun Pharma also to some extent, good companies to hold for a longer term perspective. So get out of Laurus Labs for sure, and Divis is a hold, and the rest of the companies I mentioned.
All right. There you have it, all your questions and queries answered. If we've not been able to take up your stock-related questions, don't fret. We'll be here on Buy Now, Sell Now every single day from Monday to Friday. Gentlemen, Kunal and Vijay, thank you so much for joining us on today's episode. Well, moving on, as per reports, the PSB recapitalization plan has been sort of mooted by the banking department to the Prime Minister's office. And in fact, there's a figure of 1.31 lakh crore rupees, which is taking the rounds for FY21. That's the amount that the banking department is considering infusing in PSU banks for this fiscal. They will in fact be deciding on this figure perhaps in a month's time. It will definitely be needing the cabinet nod, but yeah, that's the latest. Let me just get in Varun's take on this. Varun, PSU banks in general have borne the brunt of several factors, and usually as well, we all tend to prefer private banks for investing and sometimes for conducting our banking operations as well. We are looking at a 1.3 lakh crore rupee figure. It's something that has been mooted even in the past years as well when we've got this recapitalization. How are you looking at this, and what's your take on this 1.3 lakh crore figure? Do you think it's enough, especially as we come out of this crisis, or we're partially still in the midst of one?
No, all really pertinent questions, Mobina. You're asking questions that I wish I could answer, but I'll tell you what I can just say. If I add up how much ICICI Bank, Axis Bank, IndusInd Bank, and a few of the other private banks as well that they've raised, it's quite a large figure, right? If we add up all the fundraising that we've seen. But if you've noticed one key trend, which has been there since the beginning of the last 3 months, where have you heard a PSU bank raising money? We've just not heard it. SBI, PNB, the two biggest, no concrete fundraising plan that's been, announced and carried out in a big way. Even for some of the smaller PSUs, Bank of India, Canara Bank, Syndicate Bank, we've just not heard about fundraising. Whereas almost every single private bank has already raised their funds. So I think that's the gap between the PSU and the private. And if you look at the valuation between the valuation gap between the PSU and the private, a lot of brokerages and analysts on the street think that it's mainly because they've not raised money. So given that they'll be now getting this 1.31 lakh crore, if at all there is a recapitalization for these banks, I'd say it's obviously a good thing for them, and it'll give them, some additional coffers in case they need to deal with any stress. The amount is definitely significant because all the private banks together have not raised 1 lakh crore. Even if you add up Kotak, which was in April, it's still nowhere close to that. But I mean, there's a lot more loans in the PSU banks. So given to how much more lending is there on that side, I'd say it's a very decent figure.
Okay, lots more loan, but lots more stress as well. I would reckon in PSU Bank's books. Okay, we will do one thing. We'll take a very short break right here on the show. When we return, we will be getting you a gist of all the stocks and news, as well as of course, once again, getting you the BNSN quiz question for the day. Welcome back. You're watching the Money Show. You're watching Buy Now, Sell Now on ET Now. Okay, well, we've been talking since morning about how the technology stocks have really been leading the rally, and within the entire pack, it's HCL Tech that's leading the Nifty rally. This after the company gave a strong revenue as well as margin guidance. Poonam Sani is here to give us more details. Poonam?
Well, HCL Tech, in fact, has shared a mid-quarter update. They now expect the revenue as well as the margins to be better during this quarter, and this is much better than the guidance that they had shared in around July 2020. In fact, they're expecting the revenue to exceed 3.5% quarter-on-quarter in constant currency terms. This is versus the earlier revenue guidance of 1.5 to 2.5% quarter-on-quarter that they had shared earlier. EBIT margin is also seen between 20.5 and 21%. EBIT margin guidance was provided as 19.5 and 20.5% for FY21. Stating that in fact they're seeing broad-based revenue momentum across service lines, across verticals, across geographies. They're also stating that good deal booking momentum is seen during this quarter, and that is likely to continue during this month itself. Good booking is seen in the life sciences and healthcare vertical, telecom and media, as well as financial services vertical. Deal pipeline is also looking fairly healthy across service lines, verticals and geographies. In fact, do know that if you look at the stock has already run up significantly, just like many of the IT companies, and we are also seeing that the stock is likely to continue its positive momentum according to most of the analysts, and you can see that on the screens as well.
Okay, that was a very interesting link, Poonam. And keeping it with IT, another stock that's also in focus today and very much talked about alongside HCL Tech is Infosys. And obviously today they're in the limelight because they've just completed an acquisition, or rather are to acquire GuideVision for 30 million euros. Now you may be thinking to yourself, it's such a small transaction for a company like Infosys, but it's about what it's really going to do to augment the capabilities of the company. So this purchase firstly will be concluded 2 quarters down the line. So it's not yet done and dusted. It's very much in the works. Okay, it'll help Infosys augment their Cobalt portfolio of cloud services. So this is obviously a digital service and not traditional IT. This will strengthen their near-shore delivery presence, particularly for the European continent. So that's where it's focused. And it's something that should get investors fairly excited because the runway for growth in these digital and cloud services is very large. So that's all about it in a nutshell. And Infosys investors seem to be cheering that today.
Oh yeah, absolutely. And technology stocks in general, like we flagged up earlier. Well, keeping it with technology, then let's sort of refresh your memory and put your thinking caps on in our BNSN quiz segment. So the question for today as well is on technology. And we've asked you, which of the following listed IT players has delivered the highest shareholder return over the last 10 years? And we've given you the option of the 4 big tech companies: TCS, Wipro, Infy, or HCL Tech. So like I said, put on your thinking caps and tweet to us. We've already got a couple of answers. I'm not going to reveal who the winners are or what the answer is right now, but keep tweeting to us, and in just a couple of minutes from now, we will be, revealing the correct answer as well as today's BNSN quiz champions. On the broader market, of course, is buzzing in trade with triple-digit point rally after SEBI issued a clarification as well on the multi-cap reclassification order. Priyanka Iyer joins in with all of the details.
Well, yes, after the circular put out by SEBI on asset allocation framework for multi-cap schemes, SEBI has also put out a clarification regarding the same. Now, what SEBI has said in this clarification is that they sought to achieve 2 objectives. One is true to label schemes and comparison with an appropriate benchmark. So SEBI has said that it has observed that some multi-cap schemes had 80% asset allocations to large cap funds. They had a skewed portfolio. What they're hoping is that the scheme performance should be disclosed to the investors via an appropriate benchmark. So what are the options that SEBI has laid down for mutual funds? They have said that they have multiple options to meet the requirements of the circular based on the preference of the unit holders. They have said that mutual funds can inter alia facilitate switch to other schemes by unit holders. They can merge their multi-cap schemes with their large cap scheme or convert it to another scheme category altogether. So what SEBI is saying is they are open to any suggestions or proposals that will come in from the industry, if any. They have given adequate time because they are keeping in mind the market stability situation as well. But more importantly, there are multiple options available as per SEBI for mutual funds to comply with the SEBI circular.
Okay, thanks for that, Priyanka. Quickly coming back to banking and SBI, it seems like every broker really wants SBI stock price to rally because week on week we just keep getting upgrades. CLSA, Goldman, now we have Citi joining in, and the reasons are pretty much the same. It's a very large bank. It's got very good asset quality, which is comparable to an HDFC, Kotak, or an Axis. Even if you take 9% moratorium and you say all of 50% of that is going to turn stressed or go bad, Citi thinks the credit cost is not going to go above 390 bips. And at the current price, they believe that the street is factoring in more like a 450 bips credit cost. So they think the street is factoring in 60 bips extra. So that's the first reason. The next reason is look at the subsidiaries. SBI Card is doing really well. SBI General Insurance, SBI Life Insurance, all are doing well. So why are they not being counted in the SOTP? Third, also the deposits cost is coming down, so SBI's margins are very stable. These are the 3 main reasons in the Citi note, but there's a whole host of other notes you can have a look at which have come out in the recent past. So that's why SBI is looking exciting right now to a lot of people. So do have a closer look at it. It's trading at a huge discount. I think 0.8 times book value, less than 1 times book value for India's largest bank, which is quite well capitalized. So that's what the note was all about. But switching gears a little bit, Chandra is going to take us through the next story. Oracle has been chosen as TikTok's tech partner in the US as Microsoft's bid got rejected. The move comes as the clock ticks down on President Trump's executive order to block TikTok. Let's cut across to Chandra for more.
This was one of the most anticipated deals in the US, and it looks like Oracle has pipped Microsoft in the deal for TikTok. Microsoft earlier announced that TikTok hasn't accepted their bid and that it's not gone through. Hours after that, reports emerged that Oracle may have won. But it's not the same deal that Microsoft was entering. Microsoft wanted an outright purchase of TikTok's operations, not just in the US, but also in Canada, Australia, and New Zealand. But the scope of the deal between Oracle and TikTok is narrower. From what we've read so far, it seems like Oracle will become the technology partner for TikTok in the US, which means that all the data generated by TikTok in the US will reside in Oracle servers, since data sovereignty was the major bone of contention here. We have to, of course, await confirmation from the key banker in this deal, which is the White House itself, which has played such a key role in the sale of TikTok. What may have also worked for Oracle is that it has collaborated a lot with the US government in the past. So that relationship also may have worked. And remember, they have been trying to up their game in cloud, an area where Amazon, Google, Microsoft clearly have an edge. Oracle recently also partnered with Zoom to become the technology partner. With the TikTok deal as well in the bag, it could make them a serious contender as far as the cloud market is concerned. So that's the big deal coming in from the US.
Okay, well, yes, Oracle all set to become TikTok's US partner as Microsoft bid has been rejected by TikTok's parent company, ByteDance. That's the big news coming in. Thanks, Chandra, for the update. Well, it's time then to reveal the answer of the BNSN quiz question that we asked you at the beginning of the show. And of course, reveal who our BNSN quiz champions are. Remember, we asked you which of the following listed IT players has delivered the highest shareholder return over the last 10 years. Is it TCS, Wipro, Infy, or HCL Tech? Well, for all of you who thought it may have been either Infy or TCS, well, guess what? It's actually HCL Tech that's managed to deliver one of the best shareholder returns over the last 10 years. So many congratulations to our quiz champions for today. We just have about 3. Jyotiraditya Sharma, whose Twitter handle is @Jyotiraditya SH, Shivam Mitra, whose Twitter handle is Shivam Mitra 4, and Nikhil Kulkarni, who can be found on Twitter at NikhilK97856911. So kudos to all 3 of you. This was indeed a tricky one, but you guys have definitely proven yourselves and being the master of course, BNSN quiz chunk. Okay, well, it's time for our BNSN Celeb segment. Meantime, actor, producer, and sports enthusiast Chitrangada Singh speaks to us exclusively on our BNSN Celeb segment on investing tips, her wealth creation ideas imbibed since childhood, and of course, the upcoming film Bob Biswas, directed by Sujoy Ghosh. Listen in.
One has to plan like what next. Of course, there's always Netflix. But other than that, I've done a little bit of writing. So there was a short film that I was working on, and I hadn't got the time to finish with the screenplay and the dialogue. So that's something that I finished, and I'm very happy with having had all the time, and I've really worked hard on it. So that, and then there's another film that we were supposed to start shooting for in April. Lekin, of course, that didn't happen, and which gave us the time to start working on the characters. So with the director and the writer, we've been working on that script as well. So yeah, I mean, there is this and that. I've done some other stuff like baking and a little bit of horse riding. And now recently I've gone and got my ACL surgery done for the knee, which means I'm sitting at home for at least about 3 weeks. I won't be able to move around at all.
We also heard that you're working with a Bengali teacher for one of your upcoming films, Bob Biswas. So could you tell us a little more about that and what it was like?
This is the one that I was talking about actually. Yeah, same film. No, so Sujoy Ghosh, who's written the film, he wrote the character as a Bengali girl in the beginning, and then I started my classes and everything, and then I don't know, he needed to make certain changes in the screenplay because of what was required in the script. He was still working on it. So yeah, he took that bit off that I am speaking Bengali. It's mostly now Hindi. So yeah, I didn't really have to go through, but I did start learning Bengali a little bit, yes.
Okay. And you produced Surma. Could you tell us more about being behind the scenes versus being in front of the camera? And what gives you greater joy, and can we expect more such productions in the near future?
Inshallah, I hope so. I really hope so. What was different was, my God, I just realized that it's a lot more hectic, I mean, it is a lot more, how do I say this? So firstly, you need to be a lot more persistent. You have to want it much more bad than you probably do as an actor, in the sense you live with this project. Like, I started in 2016 and we finally managed to finish in 2018. So it took me like at least 2.5 years to actually see it on screen. To have that kind of persistence, to work with people, to get the right kind of, team together. Just managing people, like creative people, I think it just is quite tough, because it is not a 9-to-5 job. There's a lot about creative opinions and discussions and who gets what on the table.
जो सदस्य विरोध में ना कहें, मेरे विचार में नो तो आप कर रहे हो, लेकिन उस विधेयक को पूरा तो पढ़ो। वो इस देश की जनता के हित का विधेयक है। हाँ, मैं बोल रहा हूं, मैंने पूरा विधेयक पढ़ा है। हाँ, प्रश्न ये है कि विधेयक, मुझे कुछ बोलना पड़ेगा। प्रश्न ये है कि विधेयक को वापस लेने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें। मेरे विचार में निर्णय हाँ वालों के पक्ष में हुआ, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है। मंत्री जी अब अपना विधेयक वापस ले सकते हैं।
Sir, Honorable Sir, I wish to withdraw the bill.
आइटम नंबर 9, श्री प्रहलाद जोशी जी।
Sir, I rise to move for leave to introduce the bill further to amend the salary, allowances and the pension of the Members of Parliament Act 1954.
प्रश्न ये कि विधेयक को पूरा स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें। मेरे विचार में निर्णय हाँ वालों के पक्ष में हुआ, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है। माननीय मंत्री जी अब विधेयक को पूरा स्थापित करें।
Sir, I introduce the bill.
आइटम नंबर 10, श्री प्रहलाद।
Okay, what you just, of course, heard is the monsoon session that's currently on, where the finance minister just tabled the supplementary demand for grants. All right, well, on that note, quick break right here on the show.
Welcome back to Buy Now, Sell Now. As the pandemic shifts working from home to the new normal, we spoke to S. Venkatesh of RPG Group and tried to decode work from home policies, skills, and the future of work. Let's listen in.
Know the huge advantages that accrue to an employee because of remote working. It's less commute, less exposure to pollution, more quality time with loved ones. So when we saw that this was working very well in the initial stages of the lockdown, we said, listen, why don't we extend this to our new way of working? So that was the germ of the idea. We put together a very young professionals task force, and they came out with a brilliant proposition. We thought they will come out with something for manufacturing or for IT services, but instead they pivoted it around the kind of work that you do. And therefore, it now gives us the opportunity to extend work from home, which was in a sense a privilege which only office staff and IT employees enjoyed, to even extend it to manufacturing, or even projects or plantations. And that's the kind of terrain that, literally and figuratively, that we have in RPG. So yes, to answer your question, it is going to be a completely different way of working. And I believe our investments, early investments in digital technology.
Okay, we've run our course here in Buy Now, Sell Now. Thank you so much for tuning in. Keep it with ET Now. Markets at noon coming up next.